Honor to introduce my own article who underwent a training for 3 years under me. And today he is going to speak for us, for the benefit of all the members, on a topic called the recent pronouncement which has come through our apex court, the interpretation which our apex court has given in the GST law. So to speak on the subject, we have Dipesh Jain, who was an article in my firm. He was very industrious when he was doing articles, and now he has been employed in one of the big fours, and he is working there as a manager for compliance activity under GST law and FTP, foreign trade practices. So we have here Dipesh Jain, who will be enlightening us on the subject, on the interpretation which the apex court has done in GST law. So over to Dipesh. Thank you.
Thank you so much. Good morning, everyone present here. So at the outset, I would like to thank Chengalpet District Branch of SIRC for giving me such an opportunity to speak at such a forum. And also I would like to thank Satya Narayan sir, Narasimha sir, Yuvamurthy sir, and my guru, Samat sir, under whom I took training in indirect taxation. So thank you so much, sir, for that. So moving on to today's topic, is my screen visible?
Yes, sir.
Yes, Dipesh.
Yes, sir. Yes, sir.
So in today's session, we are going to cover 4 case laws. The first two being the most talked about case laws in the recent 1 month. And the first one is Mohit Minerals, which speaks on ocean freight taxability. The second one, Northern Operating System, is nothing but on the secondment, the treatment under reverse charge mechanism. And the third one is structure, the associates, and the fourth one, Pacific Industries, is about ITC 02A and some technical glitches in the GST portal. So again, a very good morning to everyone. So we go ahead with the first case law, Mohit Minerals Private Limited.
So your audio is not that much clear actually. Can you?
1 second. Is it clear now, sir? Hello.
Well and good,
Yes, Dipesh, you just come, lean a bit front and talk. Yeah, lean a bit front and talk, and be a bit loud. That's it. Thank you.
Okay, so right. So beginning with, so what are the facts of the case in the case of Mohit Minerals is that assessee was importing non-coking coal from various countries, South Africa, US, by ocean, the means of ocean, under CIF basis. So CIF contract is nothing but where the foreign exporter and the foreign shipping line, foreign exporter enters into a contract with foreign shipping line for shipping the goods to India for the want of importer. So the petitioner was importing goods on CIF basis from various countries. And to create a level playing field for the Indian shipping lines, government in the service tax regime introduced the concept of reverse charge mechanism for the ocean freight, that is transportation of goods by a vessel from a place outside India up to customs station in India. For creating a level playing field, they have brought this service when received from a foreign shipping line under a CIF basis under reverse charge mechanism. So that was brought in service tax regime, and the same was carried forward in the GST law as well, and for which section 5 subsection 3 of the IGST Act is the basis which says the government has notified certain specific services for which the recipient will have to discharge tax liability under reverse charge mechanism. And one such service is transportation of goods by vessel from a place outside India to the customs station in India. So now what was the issue exactly in the given case is that the assessee, the notification number 10/2017, which is nothing but which is the RCM notification under IGST Act, that is issued under section 5 subsection 3. And section 5 subsection 3 only speaks on categories of services and goods. And it nowhere speaks on who will be the recipient, who can be the recipient. So the very contention of the petitioner was that one point, that the notification 10 bar is ultra vires the act because it can only specify the categories of goods and it cannot specify who can be the recipient, who will discharge under RCM. And second scenario, the contention was that it leads to double taxation. Now, how double taxation? Because when the goods are imported into India by ocean, so first the assessee has to pay the basic custom duty, IGST under Customs Tariff Act on the assessable value under Section 14 of Customs Act. And that value will include the freight portion also. So already the freight portion has undergone a charge under Customs Tariff Act. Now, second, why this notification 10 and 8 bar 2017? 8 bar 2017 speaks on rate, which is 5%. And the second thing, so to break here, so now 5% is the rate on which there will be the rate. But what is the value on which the 5% has to be applied? So that is, in a case of CIF contract, the assessee will not be knowing the freight value. So he cannot compute GST on that. So just to overcome that embargo, they said that the taxable value for ocean freight will be 10% of CIF value, which comes from notification 8 bar 2017. So on the basis of these two grounds, assessee filed a writ petition in Gujarat High Court, stating that these both notifications are ultra vires the IGST Act. So Gujarat High Court, after hearing everything, they held that, as said by assessee, notification 10 bar 2017 is ultra vires because it's issued under Section 5 subsection 3, which can only specify categories of supply and not who is the recipient. So if we read the statement, assessee had filed a writ application before the Gujarat High Court, challenging the legality and validity of the notifications on the grounds that besides specifying categories of supply, the notification also talks about corresponding recipients. Hence, it's ultra vires and hence unconstitutional. And the second point which Gujarat High Court brought out is that in the given scenario, as I said earlier, in a CIF contract, the foreign exporter enters into a contract with foreign shipping line for shipping the goods in India under CIF basis. So the privity of contract is between those two parties. Nowhere the Indian importer gets into picture. So how can Indian importer be a recipient of this service when he is not involved in the contract at all? So when he is not the recipient, then why at all he has to pay tax in the reverse charge mechanism was the contention of the Gujarat High Court. And since the Gujarat High Court ruled that importer cannot be called a recipient in the GST Act, so the question of availment of credit on the tax paid for ocean freight is also questionable, cannot be allowed under Section 16(1). So there are a lot of deliberations going on this, the credit aspect, whether can we avail or not, once the Gujarat High Court judgment came. But revenue went an appeal before the Supreme Court on the same topic. And the revenue was represented by N. Venkatraman, the Additional Solicitor General of here. So his contentions were basically that the particular transaction of ocean freight and the goods which are imported should be seen as two different legs. It should not be combined. Import of goods should be seen as a single transaction, whereas the freight component should be seen as a separate component. Now for this, and the second point which revenue contended is that notification 10 bar 2017 clearly identifies an importer as a recipient for the purposes of reverse charge. So, and for this basis, what they went to say on that, Section 2, subsection 107 defines taxable person. So taxable person is a person who is registered under Section 22 or who is liable to register under Section 24 of CGST Act. And if you move on to Section 24, which talks on compulsory registration in certain cases. So Section 24 subclause 3 says that a person shall liable to be registered if he is liable to pay tax on reverse charge basis. So the contention of the revenue is that since Section 24 subsection 3 says that the person is liable to pay tax in the reverse charge, he has to obtain registration, and also given the definition of taxable person and the notification. So it's a very much combined entry, and the importer is liable to pay tax under reverse charge mechanism. And again, so what the revenue contended, that is what is charged for goods, as said earlier, is under Customs Tariff Act, and what is taxed for the ocean freight portion is under Section 5, subsection 3 of the IGST Act. Now, the third leg which revenue contends that, so now when you say that he is a recipient, under what bracket you call him a recipient? Because Gujarat High Court said that he cannot be called a recipient because he is not receiving any service. So, but the revenue contended saying that Section 2, subsection 93, clause C, which speaks on who can be a recipient of service. Clause A, clause B, and clause C. Clause C is a scenario where no consideration is paid. In such a scenario, the clause says that a person who receives a service shall be a recipient of service. Whom service is rendered shall be the recipient of service. So in a CIF transaction, the Indian importer is receiving the service, and hence he will be the recipient of service, was the point of the revenue. And the last point which revenue contended is that notwithstanding anything, Section 5, subsection 4, which is in abeyance till date, which was brought for RCM and for supplies received from unregistered suppliers, which created a large hue and cry when it was brought, and it was kept in abeyance, and it's in abeyance till date. So the revenue contended that Section 5, subsection 4, if we see the wordings, now amended Section 5, subsection 4, it says that it reads as to specify a class of registered persons who shall, in respect of specified categories of goods. So here they bring in both the categories, specified class of registered persons and specified category of goods and service received from an unregistered supplier. So the revenue contended in a given case, if notwithstanding anything above, the importer is located in India. He is receiving the goods or service from the exporter, foreign exporter, who is an unregistered supplier. So he can very much fit under Section 5, subsection 4, though kept in abeyance. It can be brought under this category, was the contention of the revenue. But now what assessee contended is that, as it was in the case of the writ petition before Gujarat High Court, they said that power under Section 5, subsection 3 of IGST Act is only to specify the categories of supply, while actually it's the liability to pay is fixed on the recipient. The government cannot specify who the person is liable to pay tax. So 5.3 can only specify the categories of supply as it reads. And as the Attorney General interpreted that 293C, the importer will fit under the bracket of recipient. Now that cannot be the case because he is not the recipient at all. The service of this is rendered to the foreign exporter by the foreign shipping line. The service of freight is rendered by foreign shipping line to foreign exporter. It's nowhere rendered to the importer. Just that the transaction is happening in India, goods coming to India. So the assessee is recipient only for the import of goods under 293A, where consideration is payable. In the given scenario, he is not at all a recipient, and hence it cannot be said that he will fall under 293 subclause C. And coming to the point of Section 5, subsection 4, the assessee contended that even 5, subsection 4 speaks only about the recipient, but nowhere importer is the recipient, is what is the contention of the assessee. So I'm just pausing here for a minute. Anyone has any clarifications? Hello? Hello? Hello, am I audible? Hello?
Yes, Dipesh, you are audible, yeah.
Yes, so just pausing here. If anyone has any queries, you can take, otherwise we can move on.
Any query from the members, they can put it in the chat box.
Yeah, okay, sir.
Dipesh, you proceed. If any query is there, people will put in the chat box.
Okay, sir. Right. So Supreme Court, after deliberations from both the sides, hearing the senior counsels from the petitioner side and the Attorney General. So the Supreme Court first said that importer is the recipient of service. Now the grounds for this was that the place of supply provision, it's section 13 of the IGST Act, is the place of supply when either the supplier is outside India or the recipient is outside India. So in the given case, the supplier is outside India. And for section 13 subsection 9 is nothing but the place of supply in the case of transportation of goods from a place outside India. The place of supply is destination of goods. So in the given case, since the goods are coming in India, the place of supply shall be India. Read with 293 subclause C, which says that to whom the service is rendered is the recipient. Supreme Court saying that this creates a deeming fiction for the importer to be treated as the recipient of the shipping service. And also, Supreme Court upheld section 5 subsection 4 saying that though it's in abeyance, it reached a contention of the union that if the importers do not qualify as service recipients, the impend notifications would derive their validity from section 5 subsection 4, since as long as source of power to legislate or issue a notification is available, the lack of mention and incorrect reference or mistake does not vitiate the exercise of such power. So on this basis, Supreme Court concluded that importer is the recipient of service, and notification 10/2017 is also very much valid and it's not violates the IGST Act. But after giving two jolts to the petitioner, finally Supreme Court concluded that given all that, the levy imposed on the service aspect of the transaction is in violation of the principle of composite supply enshrined under section 2 subsection 30 read with section 8. So Supreme Court brought in the concept of composite supply, where they say that in the given case, composite supply, goods are imported, freight portion is included, and already on that entire portion, assessee is paying tax. And the Customs Tariff Act, Basic Custom Duty, IGST also is paid. So charging him again separately through a separate provision on the service portion shall be violation of the composite supply definition and section 8 of the CGST Act. So on this very basis, Supreme Court struck down the double taxation arising from the ocean freight, the IGST charged on the ocean freight when imported on a CIF basis. So since the Indian importer is liable to pay IGST on the composite supply, comprising of supply of goods and supply of transportation, insurance, etc., in a CIF contract, a separate levy on the Indian importer would be in the violation. So this was the very basis of the Supreme Court judgment, which they brought down the charge on the ocean freight. Whereas Gujarat High Court was on a separate footing. They didn't consider importer as a recipient at all. And also they struck down the notification 10/2017 being ultra vires the IGST Act. So now given this ruling, once the ocean freight ruling was announced, so there were the petitioner was every assessee around who was there are so before this judgment there were various brackets of assessees. Some assessees used to pay, take the credit. Some assessees were not paying, say that we will wait for the Supreme Court judgment. Some were paying but not availing credit. So there were three brackets before the Supreme Court judgment came. So now just some points for the discussion in the forum. Now, once the Gujarat High Court judgment was delivered, so there was a question that whether ITC availed will be questioned, because High Court held that importer is not the recipient at all. So when I'm not the recipient, how can I avail the credit? That was the contention of the Gujarat High Court. But once the Supreme Court ruling came, which squarely knocked off that and said that importer is the recipient. However, on a different background of composite supply, it will not be liable to tax. So Supreme Court held that importer is a recipient. So having said this, now, so whoever had the doubt that whether availment of credit could be questioned or not, I think that based on the Supreme Court judgment, this question will be silent. That is, it can be put to rest that yes, I am a recipient and I can avail the service. I can avail the credit if I was paying or if I'm going to pay in future. So now, having said this, now one more point which came on discussion is that now the Supreme Court, on the very basis of composite supply, they read down the chargeability on ocean freight. But if you go and see the definition of composite supply, it starts as a supply made by a taxable person. And further seeing the definition of taxable person, it means a person who is registered or liable to be registered under section 22 or section 24. So if you read it carefully, the supply made by a taxable person. So here supply is made by the foreign exporter. For him to be a taxable person, he is not registering in India, either under 22 or under section 24, he is not liable to be registered. So he cannot be called a taxable person. So now whether a supply made by such a non-taxable person, whether at all it can be called a composite supply, is also a question which is not yet answered. So whether this can be a basis again for revenue to go and ask for a review petition before the Supreme Court, and whether at all this point is tenable, that you cannot call that supply as composite supply at all, then how can you go ahead on that rulings? So this is one point which we can ponder upon. So that is all, and the same issue on RCM on ocean freight and service tax was given a favorable order from Gujarat High Court in the case of Sal Steel Limited. But however, the same is pending before Supreme Court for its adjudication.
So Dipesh, so you mean to say instead of putting a full stop to the case, the apex court has put a comma?
Yes, I feel that only, and how this point is taken further, we have to wait and watch.
So that is what. Instead of putting a full stop, they have interpreted the definition of recipient.
Correct.
And they have categorically stated that there is a deeming fiction. So importer indirectly becomes a recipient, and he is liable to pay tax, but only they have interpreted the only point which they have considered is composite supply. And again, if you go to the definition of a composite supply, that is also not tenable because it says taxable supplier or registered person, taxable person. So the question here is whether the person who is supplying the goods from a non-taxable territory, has he taken registration in India? So can we call him as a taxable person? That is a big question, you mean to say?
Yes, sir.
So that is still open and dispute will be on.
Right, sir. So even that is the same thing, and Supreme Court, they ruled down the definition of recipient. That was a very big, but in one way it favored because the availability of credit is put to rest.
No, in my view, no, I am with 100% with Supreme Court on the definition, because that is what the interpretation comes along when you read the definition of recipient. So I am with the Supreme Court, but the composite supply is a big question. So composite supply, it starts with the term taxable person. So that is a big question. So instead of putting a full stop, they have kept the comma. Yeah,
and
thank
whether
you.
it will be reviewed or not is a big question.
That is another ball game.
3-member judgment and 3 bench members. So
No, that is a ball game now, different ball game now.
yes.
So what is your view whether people who are availing the services or who are importing under CIF basis, whether they have to continue paying the tax and claim credit, or they should stop?
Yes, sir. So coming to that in my next slide. So now there are 4 buckets. One for the future periods, And before that, before the judgment, there were three brackets, as I said. Tax was paid, credit was availed under RC. So under this bracket, so there are plethora of judgments where Supreme Court, now department cannot come back and say me that since there was no levy at all, you had taken the credit, you just give me back that credit. That cannot be said with a plethora of judgments where they said that the time the tax was paid, it was chargeable. There are no other rulings which denied that, the apex court rulings or the law which was other way. So for the assessees who have paid the tax and availed the credit before the judgments, can just be, no action is required from their end. For whatever is done, it's done. And the second bracket, the assessee who have paid the tax but have not availed the credit, they can go for refund under section 54. Now, when you go for a refund, there will be one question of period of 2 years, the limitation period. So generally it will be 2 years from the date of payment of tax. But a question can be asked whether for such payments where now the apex court rule that tax was not at all payable, will limitation period of 2 years apply? So in this case, there is nothing as such in GST law, but in central excise law, the limitation period was not applicable for payments made under protest. So when I say payments made under protest, now in GST law, there are no separate challan, a separate format for making payment under protest. What at best I can do is I can just give a letter to my jurisdiction saying that I'm paying ocean freight, I'm paying under protest. But there is no specific challan or form for which I can say that I'm paying under protest. So this limitation period of 2 years could be a hindrance, but gut feeling is that it could be overcome at the higher forums, that this period shall not be applicable for the given case because tax itself was not payable at first case. So then why will limitation period of 2 years apply? The third bucket is tax was neither paid.
Dipesh, only one observation.
Yes, sir.
With regard to that limitation, look, I have attended various forums and people across the forum, they have just told that their period of limitation will not come because the government does not have the authority to collect the tax.
Correct.
But if I read section 54 subsection 1, it says that taxes, interest and any other amount. So by adding the term any other amount in section 54 subsection 1 and making that limitation of 2 years applicable on any other amount, so I feel that the intention of the government is to include this scenario within the limitation period of 2 years. So if you read section 54(1), it has any other amount. So which is not neither a tax nor an interest. Okay, you can say it is a penalty which you have paid. Okay, and there is no penalty, and you are telling that so it is any other amount at that time. So even if the tax which you have paid is not a tax, and you want to claim a refund, so it will go under the category any other amount, and you can only file refund for that any other amount, and the period of limitation of 2 years should be applicable. That is my view, and you can have your own view.
Yes, sir. So, but I think though the lower forums won't accept, then again the higher authorities might accept that because tax was not payable at the first instance. So why is the limitation for refunding that back? The higher forums may appreciate that point, if not at the lower forums.
Yes.
And moving on to the fourth bracket. So what will be the prospective action for the
I think third bracket, Atesh, Dipesh, third bracket.
Yes, sir. Third is okay. So coming to third one, the assessees who never paid tax on ocean freight till date can still be following the same status quo by not paying it. For even for the past periods, they need not pay. No action is required from their end. And for the future periods, all the assessees, based on before coming to a conclusion for not paying, they must just go through all the contracts and assure that they're under CIF basis. And based on the Supreme Court ruling, since it will be binding on both the assessees and the department, unless government comes out with some other notification or some other way, till then we can be rest assured that we need not pay tax and credit availment won't arise at all on ocean freight. So that is what on this entire ruling of Mohit Minerals.
Yeah, Dipesh, now coming to this ruling, okay, this is ruling is apart.
Yes.
So do you think the exporter who is under FOB, who has exported goods under FOB,
Yes,
when he is going to pay GST on the ocean freight as import or service, don't you think on the same footing, the guy who has imported the goods under CIF basis should also be taxed? Isn't it like you are seeing a similar transactions,
yes.
both are imports, but on one hand you are asking him, since you have imported the goods under FOB basis, you pay tax under RCM. On the other hand, since you have imported under CIF basis, you have Apex Court ruling which says it's a composite supply and no tax to be paid.
Yes, so that if we see it can be seen in two brackets. So one.
Commercially, then what will happen? The entire importers will try to move from FOB basis and they will all go for CIF basis import.
But if we see this way, so when I import on CIF basis, my freight portion suffers basic custom duty also.
No, even in FOB basis you have to pay, no? Even in FOB basis, if you have imported, you have to add freight, you have to add insurance.
Right.
Okay, because import duty is paid on the landed cost, and landed costs include the freight and insurance. So the guy who procures the goods on FOB basis will be forced to pay tax on the import of service. Okay. Again,
right.
There also he is going to pay. Even in the customs, he is going to pay on the landed cost. CIF basis also in the landed cost.
Right.
So is GST law doing justice to a people who are going to import the goods on FOB basis? This is the big question. This is the big question, which, yes. Look, as a chartered accountant, as a fraternity, we have to raise this question to the government of India, that what kind of justice you are doing now. And this is going to create a chaos. Look, a person who is going, like, we have to keep ourselves updated. We have to categorize the transactions when we are going to do an audit. So we have to categorically check whether the import was under FOB basis or it was CIF basis. So if it is CIF basis, no need to pay tax. FOB basis, you have to pay tax.
Right.
Isn't it? So they have created a confusion here. That is what I feel.
Yes, sir, I agree with you.
Yeah. Just a thought process for other members to think about it. Yes, Dipesh, you can start with the next.
Yes, sir. So moving on with the very next judgment, and even this judgment was delivered on the same day on which Ocean Freight judgment was delivered, Northern Operating Systems Private Limited. And this is based on, this speaks on service tax liability under RCM on secondment of employees from foreign companies to India. So now what are the facts of the case in the given scenario? Now in the given case, the Northern Operating System SSE had entered into an agreement with the group company for secondment of expats from that company who are highly skilled in some specific technical or background to be seconded to India for a particular period of time. And for this, they had entered into a secondment agreement. And apart from this, they also are providing some IT-enabled services. They were importing some IT-enabled services under which they were paying RCM on service tax. That is a different line. So in the given case, they only speak on the secondment agreement, where employees are from the parent company are seconded to the Indian company for a particular period of time. So, and during this tenure, the employees who are seconded will be under direction and the control of the SSE. The salary to them for administrative convenience will be paid by the parent company in their country. And the same, they will reimburse that actual salary, social obligation cost, everything at actuals from the SSE. So there is no markup on this. So first thing to understand is that they will be under the control and direction of the company in India. However, all their salary, social purposes will be paid by the group company, who will then get it reimbursed by the Indian company. So department on this particular transaction and demanded service tax. So just a background on this, under service tax regime, under reverse charge mechanism, manpower supply service was specifically there, wherein they stated that services of manpower received from such class of persons and go on. So it will come under reverse charge mechanism and received from such class of persons. And this was a particular category. And even in GST mechanism, it's covered under import of services. So now department, this entire case is in the service tax regime. So the department had demanded service tax on manpower supply basis. And their contention was that though the seconded employee is seen under the direction or control of the assessee, but he is still the employee of the parent company. And then they see the contract as the parent company has provided their manpower to provide some service to the assessee for which they are charging. And hence it can be called as a manpower supply service. So it should be, tax should be paid by the assessee under reverse charge mechanism. However, when the assessee went to SESTAT held that the parent company is not in the business of supply of manpower. It's into IT services. So it's not into supply of manpower like team lease or something like that. So you cannot call them a supply of manpower service. And hence, when he is not the supplier of manpower, I cannot be called the recipient. Hence, RCM shall not be payable. Aggrieved by this, the revenue filed an appeal before the Supreme Court. So now coming to what are the contentions of revenue? The revenue says that the contract between the parent company in foreign and the assessee is not contract of service, but it is contract for service. It cannot be called an employer-employee relationship because the seconded employees are having some skills which are used by the parent company, and mere control by the assessee cannot be seen. Substance over form should be seen, and since the real employer is the parent company, it cannot be an employer-employee relationship. And to call it that, if at all the revenue contended that the only control which assessee has is that I can say the seconded employee to work in this fashion, to report to me in this fashion, or I can ask him to leave, but I cannot cut his salary and other things. So I cannot call them to be an employee of my company, was the contention of revenue. However, assessee contended that the employer-employee relationship very much exists here, because the secondment agreement, for the period of secondment, he is not, though is in the payroll only for the administrative convenience of transferring the salary. He is a very much employer of the Indian company. He performs services for Indian company. And just for administrative convenience, the transaction is structured in that way that the salary is first paid by the parent company, then it is reimbursed from the Indian company. And furthermore, overseas parent company is not in the business of supplying manpower services. Hence, it cannot be called a supply of manpower service, and no RCM will be applicable. Now, this ruling was not that favorable to assessees as compared to the ocean freight ruling. The Supreme Court held that, disregarding all the previous rulings in the case of Nissan Brake, the SESTAT's ruling in the case of Volkswagen, Apex Court said that substance over form should be seen. That is, just control and direction cannot determine who is the real employer and who is the real employer. So the Apex Court held that agreements entered by the assessee with overseas group company clearly point to the fact that the overseas group company has a pool of highly skilled employees who are entitled to a certain salary with social securities. And upon cessation, the employees will return back to their overseas employer or deployed in some other engagement. While the control is with the assessee, the fact remains that the overseas employer, in relation to its business, deploys them to the assessee on secondment. So the very ruling of the Supreme Court is that substance over form, and they said that you cannot look partially, so it cannot be said that he is in the employment of the Indian company. And hence, since the quid pro quo, which is nothing but they are receiving something for giving something, and hence it cannot be called, it will be called as a manpower supply service, and assessee is eligible to pay tax under reverse charge mechanism. So now 2 points for discussion here. Now in this entire ruling under secondment, Supreme Court never touched upon joint employment or dual employment. So now, just for discussion purpose, now an employee can be an employee in two companies. And also in the case of group companies, I can perform service for my company and also for my sister company. There always can be a scenario of joint employment. And the CBI draft circular of CBIC, which was 354/127/2012, it clearly stated that a staff is employed by one or more employers who normally share the cost of such employment. The services provided by such employee will be covered by the exclusion provided in Section 65 of Finance Act 1994. And also, given this judgment, it will have far-reaching implications from the income tax perspective, transfer pricing perspective. And also, there was an income tax ruling in the case of Franco-Indian Pharmaceutical, where they spoke on the joint employment. So what the SESTAT said in that case is that even if there is no specific agreement, say an employee works in two organizations, company A and its sister company, company B, and salary is paid by one and the cost is shared between them, but no specific agreement is there, the SESTAT in this case had held that the collective conduct of the employees and the employer companies for a long period of time has the effect of establishing that contract of employment is one of the joint employment. So in joint employment, as said in the draft circular, it will be outside the purview of service tax. So this point was never touched upon by the Supreme Court, or even the assessee, I think, never brought out this point while the case was heard. And so this ruling can be said to be a fact-specific ruling, and every assessee who has such type of arrangements has to relook into all their agreements, what they have entered into. And it has to be seen a case-to-case basis. It's not a universal test which can be adopted for all the secondment agreements. So that is one of the major points which every company will have to relook at all their agreements. But this ruling has caused some disturbance in the entire system, because there are many companies which bring in their experts for some very highly technical knowledge and all skill set, and they have been not paying service tax. So there are a set of companies to avoid litigation, they are paying tax in the reverse charge mechanism, and also they are availing the credit. There are a few set of companies who follow that practice also. But given the precedence of the judgment in the case of Nissan Brake, the Volkswagen case, I think this judgment was just on the basis of substance over form. And so my understanding is that this is just a fact-specific judgment, and it has to be seen case-to-case basis for each of the assessees. So that is all on this part, the second ruling. Any questions on this? Okay. So now moving on to the third case law, which is Shivako Associates and A&R, which is a Calcutta High Court judgment. So in the given scenario, the assessee was engaged in the business of LPG gas. He was supplying to both domestic and commercial establishments. And the rate for both domestic and commercial was 18% GST. However, post 25th January 18, the GST rate on LPG cylinders for domestic customers was reduced to 5%. Once it's reduced to 5%, however, the input was at 18% for the same. The assessee went to apply for a refund under inverted tax structure, where the rate of GST on inputs being higher than the output. But when the petitioner applied for the refund, the department rejected on the ground that basis circular 135/2020, as if we go to the circular 135, it says that where input and output are the same, a person cannot apply for refund under inverted duty structure. That is coming from a circular and not from anywhere in the act. So once the refund application was rejected, the assessee filed a writ application before Calcutta High Court. And the moot question to be answered here is, can a circular take away something which is not brought in the act, which is not enshrined in the act? Can a circular, as we might, everyone attending the session might know that circulars are generally just or binding on the tax officers. And the taxpayers can take to their favor if it's favorable to them. And if it's adverse to them, they can very well avoid it. That is a general understanding for the circulars issue. So based on this, the Calcutta High Court held that Act does not restrict a refund claim where the input and output are the same. So a circular is only for the purpose of bringing uniformity in the implementation of the Act. The court held that by way of impugned circular, the board is curtailing the refund benefits and making the refund permissible only if the input and output supplies are different. So the basic provision is what is not said in the Act cannot be override by a circular. So that was the very basis on which the Calcutta High Court said that the circular cannot create a class inside a class and held the petitioner is entitled to the refund claim. So this was the case of Shivako Associates. This is in case of inverted duty structure. And coming to the next case law of Pacific Industries versus Union of India. In the given scenario, the petitioner has two industrial units in Udaipur, and he has obtained two different registrations in the same state. So when he has obtained the registration, second registration, he wanted to transfer the unutilized portion of ITC to the second unit, for which there are specific provisions also, Rule 41A of CGST Act, which says that such transfer can be done by filing form ITC 02A within a month of obtaining new GST registration. However, the form was not made operational at the time when assessee had done this, and hence he was not able to transfer the ITC amounting to around 2 crores to his GST registration. So, aggrieved by this, he filed a writ petition before the Gujarat High Court. So what was the contention of the assessee? Assessee said that the ITC 02A was not available on GST portal, and hence he was not able to transfer ITC to the tune of 2.58 crores. But however, the manual copy what they had filed with the department was not accepted by them, and this is causing financial hardship to the assessee. So the Gujarat High Court held that, and this problem was also everyone faced during the Tran 1 implementation, where Tran 1 was not working properly. There are various technical glitches. And so there are various cases across the courts in India where assessees were granted relief, even if it was not online, manual applications were accepted, deadlines were extended. And the same approach the Gujarat High Court followed here, and they allowed the assessee to take the amount of 2.58 crores in the next GSTR 3B return, which is a very much big relief for the assessee. Otherwise, he would have been left to lurch left and right here and there without any solution. So these type of judgments, even in the case of Tran 1 and other technical glitches, are helping the assessees. And I think that these should be even accepted at lower levels instead of just everything bringing it to the higher forums. So in a given case, the assessee was allowed to avail the credit in his next GSTR 3B return, because the ITC 02A was not yet operational. So I think I have completed my session too early.
Yeah, no issue, Dipesh. Dipesh, with regard to the last case law, okay, Madras High Court has recently given some observation with regard to section 42 subsection 3, where the petitioner contended that since it is the duty of the government to indicate, look, as per the section 42, you have to, the portal has to give a notice to the registered person that the invoice is not appearing in the 2A. So the only ground which the petitioner contested was that the notice which is required under section 42 was not given. Rather, I was given a show cause notice. So the show cause notice should be struck down. But Madras High Court recently, very recently, it seems that in this week, court has told that since the notice, a show cause notice cannot be held void only because section 42 was not complied with. So Madras High Court rather said the intimation which is required under section 42 has come in form of show cause notice. So you have to say that even though ITC is not appearing in 2A, you cannot take the stand that section 42 has not been complied in full. So as per the Madras High Court judgment, you will end up in paying the taxes. Now it is in the case is in dilemma. So any notices which comes for invoices not appearing in 2A has to be very carefully handled, since there is a judgment which is against the assessee.
Yeah, but that is only on that ground of that I was not given a notice.
Yeah, that was only, that is what, the case has not been handled properly. So since the case was not handled properly and only one ground was used as a defense mode to get the favorable order, it went against the registered person. But since it has come from the lion's mouth, okay, and that too it's from Madras High Court. Madras High Court is our jurisdiction. So we have to follow. Any officer who is going to give the notice will take the cognizance of that High Court judgment. If I am in Karnataka, then I can say that High Court ruling of Madras High Court ruling is not applicable on me. But we are in Tamil Nadu. So that case is going to create a problem to entire fraternity. Okay, and that case has to be examined in full. And then we have to take a call what will be the next course, whether the person is going for the review or he is going to make an appeal. Since it was a single member bench, he has to go for the higher forum and give the case, give a try. So thank you, Dipesh. Thank you very much. Thank you for the explanations of the pronouncement which has come from the high courts. Thank you very much.
Yes, sir. So thanks everyone, and thank you Chengalpet branch for giving me an opportunity. And I'm very much glad that I was able to speak here. And thank you everyone. Thank you.
Do you have any other doubt in this session?
Anyone, any questions or any inputs on any of the case laws can share there.
Friends, any doubt on any matters relating to refund, relating to returns can be asked now, because we have time. We will address those. Okay, so I will start. I will start with one. I will start. Hello.
Yeah, please.
Saman Satyanarayan here, Saman.
Sir.
Yeah. Normally we are doing a CPE meeting now.
Yes, sir.
So we are collecting fees along with the GST.
Yes, sir.
For that meeting, if you are giving food for the delegates.
Yes, sir.
For that, the GST will be charged by the supplier.
Yes, sir.
Shall we entitled to take that input credit for that expenditure, or it is ineligible credit?
We are collecting. So when we are providing a service, when we are providing a service,
yeah,
which is a composite in nature. First is education, plus food is supplementary. Food is the secondary supply.
Yes.
So in this case, I am of the view that credit should be given to us. Credit will be given. Section 17, subsection 5 will not come into practice.
What about the memento given to the speakers?
Memento given to the speaker, whether credit is permitted, you are asking, sir. In my view, credit will not be given, sir.
Oh.
Memento credit will not be given, but
shall
for
we
the
make it as an honorarium, that is honorarium to the speakers, then shall be entitled to get?
No, sir, it will not come. But we have to further analyze. We have to further analyze in the light of section 17, subsection 5, clause H. I will do the analysis, sir, and I will come back to you.
Sure.
Yes, sir. Yes, sir. Thank you, sir.
Yeah.
Sir.
Yeah. On this also, there are two way of working, sir. If the supplier charges 18% with input credit.
Yes, sir.
And if the supplier doesn't charge 18% but charges 5%.
Sir, as far as after the amendment which has come in the GST law, any supply of food which is in composite nature will come as 5% only. They cannot charge 18%.
Okay.
After the amendment,
without ITC, yeah.
Without ITC, yes, sir. They have to charge only 5%.
Okay.
So, friends, I have one. I am handling one peculiar one case. Okay, it is very important to update on that. We are filing refund application for export of services, correct? We all file refund application for export of services, and to prove that I have completed the export of service, because when I raise an export invoice, service invoice, I will raise in foreign convertible currency. I will put the particulars. I will report those particulars of the invoice in my GSTR1 in table number 6A. But as per the definition given in the IGST law, that is not export of service at all, because in section 2 subsection 6 of IGST Act, export of service means which have 5 heads, and one of the legs says that you should receive foreign convertible currency. So when I have raised an invoice, at that point of time, I have not received any foreign convertible currency. Secondly, when I am uploading or reporting that invoice particular in my GSTR1, I have not received the foreign convertible currency. Okay. But whereas at the time of filing refund application, I have to file a statement called statement number 3 in online portal. There I have to give invoice-wise receipt data. Now the officer has come back to me and said, like you have received, like there are 100 invoices for the tax period, and out of that 100 invoices, during the period, say December, for the month of December, I have raised 100 export invoices, and in the month of December, in the same month, as per statement 3, against that 100 invoices, in the month of December, you have received only 40 invoices. The receipt under foreign convertible currency only for 40 invoices. So he is restricting my refund application for those 40 invoices. Okay. He says that as per the definition which is given in Rule 89, Subrule 4, Clause D, it is only on receipt. So as per the statement 3 which you have filed, there are only 40 invoices which have been received during the month. So I will restrict your refund only for the receipt for that 40 invoices. The question here is whether the officer's statement, is it correct? In my view, it is completely wrong, because he has misinterpreted the definition which is given, or the requirement which is there in sections rule number 89, Subrule 2, clause number C, and rule number 89, Subrule 4, clause D. These 2 points have to be examined. We have done a detailed examination. Yesterday we were doing only this, and we came to know that Rule number 89, sub rule 2, clause C categorically states that export of invoice, the purpose of filing the statement is to establish that you have received the foreign convertible currency for the entire 100 invoices which you have reported in GSTR 1. Okay, that is the reason you file statement 3. And statement 3 is not the form to go and check what is export proceeds. There is a separate definition in the rule 89.4 sub D, 89.4D, where they say total receipt during the period. So which means I have to upload a separate working statement where I will say that I have received money in foreign convertible currency, which is not only for that December month, but also for the invoices which I have raised in the prior month. So that also form part of the export of services, turnover of export of services. So this also had to be included. And moreover, the advances which I have received prior period, but the invoice is raised now, that also has to be included. Thirdly, I have to exclude the advances which I have received during the period for against which I will be raising invoice in the future. That has to be excluded. So this is a good challenge, and it seems that the officers are insisting. My client was insisted to file. In fact, my client was threatened, saying that if you don't do or if you don't follow my words, then I will keep on rejecting your refund application. We told no bother, don't bother about it. We will give the reply to the notice which has come. Okay. So please, friends, officers are yet to be educated on the subject. They are making their own interpretations. So if you have any issues, please write to us. We are there to help you all. Okay. And that is what our committee is up to. So we thank for the day. Dipesh has done a great job. Over to Secretary Sir. Secretary Sir.
Sir, Yomati sir.
Yes, sir.
Take care.
Right, sir. Okay. Good afternoon, everyone. So it's a really wonderful program, actually, Deepak Jain sir. And I think Samar sir also continuously elaborating about the program. A big thanks to Satya Narayan sir for this organizing this wonderful program. And we also thanks on behalf of Chengalpattu branch. And we also thanks to all our managing committee and our chairman of our branch. And a special thanks to our Indirect Tax Committee chairman, C.A. Samar sir. Once again, I just give main thanks to Deepak Jain sir and all our participants for this one. Thanks to everyone for this wonderful program. Thank you. Thanks. We'll conclude the session. Thank you, sir.
Thank you, everyone.
Thank you, sir.
Thank you, everyone. Thank you very much.
Sir, one important announcement.
Yes, sir.
Sir, we are continuously having program during the last week. We are planning to celebrate our branch day celebration on 20th June. And there will be yoga day celebrations on 21st. And 23rd, there is a meeting under FRRB. On 27th, there will be an MSME program. July 1st, there will be a CA day program. And we are planning one more program under Internal Audit Committee. So coming next 10 days will be a program highlighted for both members and students. I request all the members to support for continue the support. Thank you. Thank you all.
Thank you, sir. Indu ma'am.
Thank you, Chairman, sir. Thank you, Yuva.
Thank you. Thank you.
Sir.
Thank you.
Indu ma'am session close.